Today's topic is going to be the cost, scale of production and the break-even analysis. The first thing which we are going to discuss in this chapter would be the type of the costs. इसको हम देखेंगे. Cost means that we have got variable cost, we have got fixed costs, and then we are going to go for the breakdown for that. Then we are going to see that how we are going to use these costs in the decision making process. How can we use this variable cost element and the fixed cost elements in making the decisions. Then the third most important thing in this topic would be the break-even analysis and the uses of break-even analysis. That is actually the backbone of the unit 4 in IGCSEs and A levels, that we normally discuss about the break-even, that you must know how to draw a break-even chart, and the second thing you must know is to how to calculate a break-even. That is what we are going to discuss in this particular chapter. And then the last thing is the economies and the diseconomies of scale concept, and we are going to get in detail of the economies of scale, and we are going to get into the details of the diseconomies of scale. All right, so the first thing, the business costs. So have a look. Why business costs are important? For example, you are opening up a new factory, and you analyze that what is the cost of the raw material, what is the cost of building, what is the cost of machinery, what is the cost you are going to pay for the salaries. So all of these cost calculations are made when you are opening up any business or any factory. So the first thing you do is you make a budget for that how much money will be spent while opening the business and after opening the business in the first 6 or 7 months of the operations. So we are going to discuss all of those costs, and we list down all of those costs while opening up a new factory or a business. Second is compare costs against the sales of the business. So how we're going to compare the cost against the sales of the business? For example, the sales of the business is 10,000 and the cost of operations during that particular month was 8,000. That means it's a good thing. At least we have got a profit of 2,000. But what about any certain month when our revenue or sales was 10,000 but the cost of operations was 12,000? That means we are incurring a loss of 2,000 this time because our sales is less and the cost of operation is high. So again, in this terminology, cost is important. We have to keep an eye on the cost, and it must be lower than the revenue or sales of the business. If the sales goes up, yes, the cost will go up by with lesser extent so that we keep on getting the profits. For example, if the revenue is increasing from 10,000 to 12,000, listen carefully, the sales are increasing from 10,000 to 12,000, but the costs are increasing from 8,000 to 12,000. What does that mean? That sales have increased by 2,000 only, whereas the cost has increased by 4,000. That is way higher than the revenues. That means we were unable to manage the cost in this season because sales was growing. It was a good element, but the cost was even more than that. It should not be like that. If the sales are growing by 2,000, the cost should have been grown by approximately 14 or 1500 max, not more than that, because we must be getting more profits by more sales. So actually cost is telling us about the efficiency of the business. The third thing is the cost of 2 locations of a factory. Now again, how can we use the cost data? That for example, we have 2 options. We can open up a factory in city A. We can open up a factory near city B. We are going to compare the costs of all of the ingredients. For example, the cost of building, the cost of land, the cost of transportation, the cost of transportation from the suppliers, and then cost of delivering the goods to the customer. So while we are choosing the location, we discuss about all of the costs, starting from the cost of business to the cost of delivery of the products. So we compare both of the factories costs with each other. So again, business cost becomes important for us because we cannot choose a location without having an information of the cost. Then helps in developing the pricing strategy. For example, we have gone through the pricing methods. We said that the first pricing method was cost plus pricing method. What was the cost plus pricing method? Try to recall. Cost plus pricing method was, for example, the cost of production is 100 and we want to have $20 as a profit. Our selling price would be 120. So the basic element in setting the final selling price was the cost of production. If we know cost of production, we will be able to set the selling price. What if a business do not even know about their cost of production? They won't be able to set their selling price, because whatever selling price they set, they would never know that how much profit they are earning at the end of the day. So cost of the business is a crucial aspect while making any important decision of the business. Let's recall from start till end. So cost is important when you're opening up a new business. Cost is important when you are comparing it with the sales. Higher the sales, higher the cost would be, but at the end of the day you must be getting more profits. If the sale is going up by 2000, the cost should be going up by less than 2000, 1500 or 1400 maybe. Third, that when you are choosing two different locations of any factory or any business, you again discuss about the costs of it. And fourth, the cost is important in developing the pricing strategy, that what should be the selling price of our product. Okay, and how the examiner can ask us the question about it. Analyze the possible advantages of business costs. Or the question can be, what is the importance of calculating costs of business? That can be a question. Or analyze the importance of business costs for a business. So any question can be there, and we are going to develop our knowledge point and analysis according to the knowledge point given over there. So any one or two knowledge points can be memorized. The next element is now coming towards the type of the costs. The first type of the cost is called as variable cost. What is variable cost? The cost that is directly linked and can be traced back to the product or service. So let me explain this. What do we mean by directly linked to a product? For example, on the right hand side, you can see a picture. This is a picture of packaging of a cereal. So on the packaging of the cereal, it is mentioned ingredients, which is highlighted for you. In the ingredients, it says whole grain, corn, cornmeal, sugar, corn bran, salt, brown sugar syrup, and XYZ elements. So that means all of these are ingredients which are used in the production. These are all raw materials which are the part of the product directly. That means, suppose if I say the whole grain corn that is used to manufacture a cereal is approximately 100 grams per pack. Now listen carefully. Your use of whole grain corn was 100 grams per pack. That means more you produce, the more grain corn will be used. For one pack it is 100 gram, for 10 it would be 1000 grams, for 100 it would be 10,000 grams. So the More you produce, the more ingredients would be used. So that is why we say it's a variable cost. Why it is a variable cost? Because it keeps on changing with the level of change in the level of output. One definition which we give for the variable cost is that the cost which keeps on changing with the change in the production levels. For example, if have a look at the picture which is in front of you. In this graph, we say that, for example, on the left, on the x-axis you are having an output. On the y-axis it is the cost of production. You can say the cost of ingredients. Suppose if you are not producing any single cereal, have a look. This is the point of origin, point 0. Your cost is 0. That means obviously if you're not producing a single box of cereal, that means your cost of ingredient remains 0 because you are not using any ingredient. If you are producing one, your cost goes up. If you produce 100, your cost will further grow up. If you produce 1000, your cost will further go up. So with the increase in an output, the costs keep on increasing. That is the concept of the variable cost. That with the change in the production level, there is a change in the cost of ingredients. The more you produce, the more ingredient quantities would be used. So this is called as variable costs. That which varies, which keeps on which keeps on changing with a change in the production levels. The next element is the fixed costs. So have a look. What is the fixed cost? As the name says, the costs which are related to a product but cannot be traced back to the product or service. What do you mean by it cannot be traced back? That means we knew that more you produce, the more ingredients would be used. It can be directly linked with the product. For example, I said that 1000 grams of corn was used. So for example, 100 grams of corn was used in one pack. That means for the 10 packs, we will be using 1000 grams of corn, obviously. The more we produce, the more it would be. It was directly traced back to the product. But when it comes to the fixed cost, it cannot be traced back. For example, salaries paid to the managers. How can you say what is the cost of salary per pack? Can you find that out? That for example, if the factory is producing 1000 packs of cereal in 1 month, how much salary you are paying to a manager of managing those 1000 packs? In the next month, suppose you are producing 2000 packs. Would the salary of the manager change? No. Let's talk about the rent of the factory. You are producing 1000 units, the rent of the factory is 2000. If you produce more, the rent would increase? No, the rent would remain the same. As long as you are using the same space, same factory, same area, your rental cost will remain the same. The salary of the manager will remain the same. So that means these are the costs which are not directly linked with the production levels. Whether you produce more or you produce less, it remains stable. But yes, the cost of the machine operators, the more you produce, the more machine operators would be required. For example, if you have got 10 machines working in 3 shifts, that means you would be requiring 30 machine operators. If you have 10 machines and working in 1 shift, that means 10 would be required. It can be called as a variable cost because with the higher production you will have to increase the number of shifts. But the salary of the manager, the rent of the factory won't change up to a certain level of output. That is why we call this as a fixed cost. Have a look at the picture in front of you. It is never zero. It is fixed at some certain point above zero. Suppose this is 5000. It will remain 5000 whether you produce less or more. The salary of the manager will remain the same. The salary of the CEO will remain the same, whatever the output is. The rent of the factory would remain the same, whether you are using or producing in one shift or you are producing in 3 shifts. The cost of the factory would remain the same. There won't be a big change in it. So any question so far till this particular point? So let's move ahead with the next element. That is the total cost. What is the total cost? The overall cost of production, that means combination of the fixed cost plus variable cost, is called as the total cost. For example, if the variable cost at a certain point was 5,000 and the fixed cost was 10,000, that means the total cost would be 15,000 at that point. So total cost is the combination of fixed cost and variable cost. Now let's try to understand this diagram. For example, at a certain point you are producing 0. Now listen carefully. This is important. If your output is 0, that means your cost of ingredient is 0. While you are making the cereal, you won't be using any whole grain corn. So it would be 0. Yes, the variable cost is 0. But what about the factory rent and the salary of the manager? It will still be there. So that is been mentioned in the fixed cost line, the dotted line of the fixed cost, which you can see over there. That is 5,000. So that means if you are even producing nothing, your fixed cost will be 5,000. That means your total cost would be 5,000 as well at that certain point. Why total cost is 5,000? Because fixed cost 5,000 plus variable cost 0. That means total cost is 5,000. So that means total cost will be drawn as a parallel line, just like a variable cost. It is always a parallel line. How we are going to draw it? It's simply easy. We just find the starting point, because that's what we already know. We just try to identify the ending point, which is normally given in the question. Just connect the 2 dots and make a line. That's what you guys have done in the mathematics a lot. Starting point is what we already know. The ending point is what it is given in the question. We just mark it and connect the dots to make a straight line. That is how we draw the total cost. That is how we draw the fixed cost. That is how we draw the variable cost. For variable cost, you know that the starting point is always 0. For the total cost, you know that the starting point is always the point of fixed cost. That's what we already know. That is the standard formula. We just want to know the ending points and just connect the dots, and that's it. It seems a little tricky in the start, but it would be really easy when you're going to go for the next slides. So any question so far related to the total costs? If it is clear, let me know it is clear. Shailaji. So the next element is, after the total cost, the total revenue. What is the total revenue? The sales, obviously. That how much sales are there of a business. How much revenue we have generated from the sale of the output. The higher the sales, the higher the revenue. And remember, sometimes in the paper you are not given the sales directly. Sales mean the total sales of the business. So you might be having a selling price of a product times the number of products being sold. For example, the examiner tells you that the business has sold 1,000 products. That means it's a quantity. And the selling price of each product was $5. What we are going to do, $5 times the quantity, and we are going to get the revenue easily. Even if the revenue is not directly given in the question, we can find it out using the formula selling price times the quantity, right? And again the same question, if you are not selling a single product, what is the revenue? It's 0. So we know that the revenue line will always start from the point 0. The variable cost will also start from the point 0. the fixed cost will start and end at the same point. It will be a stable parallel line of the fixed cost, and the total cost is always started at the point of fixed cost. It is never zero. So if we remember these at basic points, it will be really easy for us to draw the break-even chart. Let's move ahead with the another concept of the average cost. What is the concept of the average cost? Average cost, as we know, that the per unit cost of production. What is the per unit cost of production? And as we said in the economies of scale concept, that this green line is showing you, this green arrow is showing that the cost is decreasing with the increase in output. On the x-axis we are increasing the output. That means the cost keeps on coming down till this point when the output is increasing. So you keep on increasing the output, the cost comes down. The cost means the cost per unit, that is the average cost, comes down. But at some certain point it starts going up again. You produce more and your cost goes up. The average cost goes up. That is called as diseconomies of scale. So as we say that the relationship of economies and diseconomies is always a U approach. It is just like a U. At the start, when you increase the output, you start having economies of scale. But after a certain point, you start facing diseconomies of scale. The cost started going up again. So as we know, what is the formula of the average cost? That is the total cost divided by the total output. This line you are seeing over there, it should be in the middle of it. Total cost divided by total output. That is how we find the average. The total cost of production is 5,000 and the output is 1,000. That means the cost per unit is $5. This is how we calculate the average costs. Now have a look at the question which is in front of you. Calculating the costs of the products. So things might be a little jumbled up in this picture, but still we can find out the total variable cost. What is the total variable cost? When multiple variable costs are given, we join the variable costs together to find out the total variable cost. So what is the total variable cost of product X? You can see that the first variable cost is a variable material cost and the second one is variable labor cost. Both are variable. Third one is fixed cost and fourth is the output, that is number of units produced. So the variable of material and the variable of labor combined together, 5 plus 10, 15 is the total variable cost. Similarly, 10 plus 14 for product Y is the total variable cost. Similarly, 8 plus 6 is the total variable cost. The second thing is the total cost. What is the total cost? Total cost is variable cost plus fixed cost. So all three combined together, 5 plus 10, 15 was the total variable cost. 15 plus 9 fixed cost would be called as total cost. As we know, total cost is variable cost plus fixed cost. What is the formula of the average cost? The total cost divided by number of units. So what was the total cost of our product S? 15 plus 9, 26. What is the units? 4,000. So what we do? Cost per unit. What is the formula for average cost? The total cost of production divided by number of units produced. 15 plus 9, 24, 4,000. So 24 million divided by 4,000. Whatever the answer is, that is the average cost of production for each vehicle. Right? So you can find the answer in points as well. 24 divided by 4,000, that would be, for example, 0.10 million would be the answer, because the cost has $M. M stands for million. So this is how the question could have been, which may ask you to find the total variable cost, to find the total cost, to find the average costs. Now have a look at product Y and product Z. I would want you to take 2 to 3 minutes and find out all three ingredients, the total variable cost, total cost, and average cost of product Y and product Z one by one. Take 2 minutes, sort it out, let me know once you're done. Alright, so let's move ahead with the next element, that is the break-even point. What is break-even point? Have a look. The level of output where total revenue is exactly same as the total cost. अब जरा गौर से देखें, ब्रेक इवन पॉइंट क्या है? जहां पे आपका टोटल रेवेन्यू इंटरसेक्ट करता है विद द टोटल कॉस्ट, दैट पॉइंट इज कॉल्ड एज अ ब्रेक इवन पॉइंट. तो आप जरा गौर से देखें, डायग्राम में you are seeing a certain point of intersection between total revenue and total cost. This point of intersection is called as a break even point. इस पॉइंट से हम स्ट्रेट लाइन नीचे ड्रॉ किया करते हैं, यहाँ पे आउटपुट आइडेंटिफाई करते हैं कि इस लेवल पे कितना आउटपुट है, इस एग्जैक्ट पॉइंट पे कितना आउटपुट है. दैट पॉइंट इज कॉल्ड एज अ ब्रेक इवन पॉइंट. ठीक है. अब ब्रेक इवन चार्ट को ड्राफ्ट कैसे करना है, how we are going to draft the break even point, that is important. How we do it, I will give you a step by step approach. So isko you will be memorizing that. It won't take more than 3-4 minutes, but I need all of you to be very attentive in at this time. Have a look how we can draw a break even chart. If you follow this approach, it would be really a piece of cake for you to draw a break even chart. You just have to follow the steps. So have a look. On the x-axis we are given the units of output always. On the x-axis there is always a unit of output, and on the y-axis there is always a cost in terms of dollars. Cost or revenue or dollars the price. So on the x-axis number of units, on the y-axis the price. We already know about the starting point. We know that the starting point of variable cost is 0. We know that the starting point of revenue is 0. We know that the fixed cost remains a stable line, and we know that the total cost line starts from the point of fixed cost. So we know about the starting points already. What we need to know is the ending points. If we know the ending point, that means we just have to connect it with the starting point, and that's it. Now let's have a look at a step-by-step approach of drawing a break-even chart. Step 1, have a look. Draw the fixed cost. And we know that the fixed cost is going to be a straight line at some certain point. Whatever point we identify on the y-axis, suppose this is 5,000. So this is going to be a straight line at the point 5,000. So the first thing which we are going to do is draw a fixed cost. Second step, once you are done with the fixed cost, you have to draw a variable cost. And we know that the variable cost starts from the point of origin 0. So you are going to draw a straight line from the point 0 up to the fixed variable cost. So first step, fixed cost. Second step, variable cost. What is the third cost we have? Fixed cost plus variable cost, that is called as total cost. So the third thing which we are going to do is we are going to draw the total cost. And we know that the total cost starts from the point fixed cost. So whatever the starting point of the fixed cost, at this point the total cost would start. Now have a look at the diagram. We're going to draw a straight line from the point of fixed cost to the ending point, whatever is given to us in the question. That straight line is going to be called as a total cost line, which is always exactly parallel to the variable cost. So fixed cost, variable cost, total cost. What's left? The only fourth thing, the revenue line. And we know that the revenue line starts from the point of 0. If we are not selling anything, what is the revenue? What is the sales? 0. So that means the revenue would always start from the point 0, and it must, I repeat, it must intersect at some point with the total cost. when you are making a break-even analysis and your line of revenue is not intersecting with total cost, that means you have done some mistake. It must intersect with the total cost always. So the point where the line intersects with the revenue and the total cost, this is where we draw a vertical line. A vertical line where total cost and revenue intersect each other. So have a look at the diagram. This is how we're going to draw a vertical line downwards to the point of output. This is how we're going to draw the break-even point. So step 1, fixed cost. Step 2, variable cost. Step 3, total cost. Step 4, revenue line. Step 5, break-even is done. So the point below the after the break-even, that is called as margin of safety. What is margin of safety? Suppose the break-even is at this point of output, suppose 5,000 units, and our current production is 10,000 units. What is the extra? What extra? How many extra we are producing? 5,000 extra. Let's take another example. Our unit of output is 6,000. Our unit of output is 6,000 at this point, but the break-even was 4,000. That means how much extra we are producing? 2,000. This 2,000 is called as margin of safety. So when we are producing more than break-even, the difference between the more and the break-even is called as the margin of safety. But if we are producing lesser than the break-even, that area is called as the area of loss. Suppose the break-even is 4,000 and we are producing just 3,000. That means 1,000 units is in a loss. That we are producing 1,000 less than the break-even point. Right? So this is how we actually draft a break-even point. Now what you need to do is you will have to take a snapshot of it, take a picture of it, and try to solve this question by yourself. In the next session, we will be trying to understand how the break-even is drafted. If you are able to draft a break-even, perfect, send that picture to me. If you are unable to draft it, ask the questions, but this is going to be your assignment to draft a break-even chart. The first thing you are going to do is you will have to mark the x-axis with some digits. You know what digits this could be. It could be maximum point is 30,000 unit, which is given over there. So the maximum point you draw is 30,000 over here in your notebook, and then you know how to draft the thing. Suppose if you don't know how to draft this thing, don't worry about it. Try to make it. See where you are getting stuck. Ask the questions to me and then start developing it. In the next class, I'll help you out in drafting the break-even in front of you. So this is it for the day. And if there is any question, feel free to ask.